Hello, everyone. Good morning, and thanks for joining us today. I'm Lauren Peretti with Housing Innovations, and I'm joined by my colleagues, Howard Birchman, Isaacs, and Sarah Zeiderveen. Sorry, Sarah. And we are part of the team from Housing Innovations, and our team provides supports to the Connecticut Balance of State Continuum of Care. And today's session is on the fiscal requirements in Continuum of Care programs. And it's the first of two sessions that we're going to be doing. Part two is on March 6th, also from 10 to 11:30. And we hope that you can also join us then. It will be different content than the content that we're covering today. So both sessions are intended to provide you with the information you need to stay in compliance with the federal rules on financial management of your grants, with the hope that when HUD comes out to monitor your projects, you have no findings and you do not have to return any money to the federal government, because we want to keep all that money in the state of Connecticut to help people who are experiencing homelessness. So before we jump into our slides, I just want to take a minute to acknowledge all of the changes and uncertainty at the federal level and share with you what we know about the status of your COC grants. So most of you currently have a grant agreement that is still active and ends sometime later in 2025. So we don't have a lot of grants that expire in Q1 in Connecticut, so we're lucky in that way. People probably know that HUD did announce the awards in late January, and those awards are intended to fund projects through your grant end date in 2026. Unfortunately, though the awards were announced, HUD has not yet moved to begin executing those grants. And if you are not already, we definitely encourage you to please subscribe to the National Alliance to End Homelessness Advocacy Alerts. There is a big push nationally to get people in contact with their senators and their Congress people to really advocate for HUD to execute those grants. Liz will put that information in the chat momentarily if she didn't already. So please take a moment to do that. So though people probably remember that the 2024 NOFO authorized HUD to renew grants again in 2025 without the usual COC competition. And what HUD had said previously is that for almost all renewals, right, they're going to process those grants without having to submit a project application in eSNAPs in 2025. But now we're living in a brave new world, right? And so we're not sure if that remains the case. And in any event, before HUD can process those grants, they need HUD to pass a federal budget, right? So right now, there is no federal budget, and we are operating under a continuing resolution that funds the government through mid-March. So we know that the House and the Senate leadership are pushing for what's called a full year continuing resolution, and that would basically extend funding at 2024 levels through September 30th, 2025, which, given the political environment that we're currently operating in, would likely be good news for COC programs because it would reduce the likelihood of cuts in the current fiscal year. But we don't know what they're going to do. So in the meantime, we have put information out by email about steps that your agency should take right now to help reduce your financial risks on these grants. So it's things like making sure you're drawing down from ELOCs every single month, right? You're only required to draw down quarterly, but we really encourage you to be doing that every month. Don't get locked out of ELOCs, right? You got to log in at least every 90 days to make sure you don't get locked out, even if you don't have anything to draw down. Submit your APR on time, and make sure that you have documentation in your files that everyone you're serving is eligible. And because we don't know what's happening with the grants, how quickly they're going to process them, what the cut situation is potentially going to look like down the road, that you've got a contingency plan in place for your agency in case there are funding delays or cuts. So if you did not get those emails, I think we sent that out twice already. If you didn't see it, you should check your junk box. Or if you think you're not registered for emails from CT Boss, go to the landing page. It's www.ctboss.org. Liz can also pop that into the chat.
I'll pop it in. Yep.
And sign up for our grantee list. And then finally, just to say, our team knows how difficult this is for everyone, and we are committed to provide you guys with the best information as soon as new information is available, and that we will do our best to help you navigate what is likely to be a bumpy road from here on out. So yeah, Howard, is there anything you want to add to that, or?
No, Lauren, I agree with everything that you said. I think it's really to the point. The only thing I might want to add to it, just as another thing to keep in mind, although you probably are not going to need, I'm really concerned that there may be a real shortage of staff at HUD, and there are some functions that we need to do that require HUD interaction. So also pay attention to your eSnaps account. Make sure you've got people in your organization that can sign into it. I don't know that there's going to be a need for it, but in case something comes up and you need to either do your technical submissions, your issues and conditions on your grant things, you want to be able to ensure you can get easily access to eSnaps, because if they have staff cutbacks, it may be more difficult to get back into the system than it used to be historically. So keep yourself active in all those systems to make sure that in case you need to do anything quickly, you're able to access all your information.
All right. So before we get started on the slides for today, just a few housekeeping things. If you can, turn on your cameras. We love to see everyone's faces. If you want to change your name in Zoom, there's a little photo here that shows you how to do that, and that way we can address you by your name. We know a lot of you, but not everyone. And I think Liz probably already put the slides into the chat. And then, as always in these sessions, please don't wait for us to prompt for questions. If you have a question, raise your hand, unmute in chat. This is a lot more interesting if we're talking with one another rather than just Howard and I talking for the next 90 minutes. Liz is recording the section. It will be posted to the web. So if anyone from the team missed it and wants to watch it, it will be there. And we are scheduled to be together for 90 minutes this morning. So we will be sure to end on time because we know you all are very, very busy. We'll answer as many questions as we can. If we don't get to your question, our team is always available. Our contact information is at the end of the deck, so please reach out to us anytime. We'll try to be mindful that some of you are new, and we will explain any acronyms that we use, but please don't hesitate to stop us if you have not understood something we've said. It's likely that you are not the only one, and we want to make sure that the information that we provide is clear to everyone, regardless of whether you've been around for 20 years or this is all brand new to you. So, if you have audio trouble at all during the course of the webinar this morning, you can use this information, which Liz will also put in the chat, to phone in and at least listen to what we're saying, if not be able to see the slides. And then we like to know who's in the room, and I think it's nice for you all to see your colleagues that are in the room. So if you wouldn't mind just taking a minute to throw into chat what agency you're with, your role and your title, where you're located. And just as a quick reminder to all of us that to sustain ourselves during these really difficult times, we've got to find moments of joy. Put something in the chat that makes you smile. So while you're doing that, I'll share something that makes me smile, and it's my dogs. So they're here with me in my office this morning, and they are not at all bothered by the news coming out from DC. So being with them is a good reminder to me to stay focused on the present moment and on things that I can control. So I see flowers, Lee. Thank you. Those also make me smile. And I see another dog fan in the chat, Kim. So thank you for that. Your kids, amazing. Yeah, puppies, walking and dancing, all beautiful things and things to help sustain us as we travel this bumpy road together, guys. So thanks. In the interest of time, I'm going to keep going, but please keep sharing with your colleagues all of that good energy this morning. So, all right, so this is our agenda for today. For people who've been to these trainings before, this is going to be familiar territory. There's not a lot new here. I don't think there's anything new other than what we just said in the beginning about the federal context. So what we're going to be covering today is match, program income, the federal cost principles for how the feds determine whether or not how you're expending your funds is an eligible use of those funds, and then the specific budget line items and the eligible costs on each of those COC program budget line items, which are rental assistance, leasing, operating supportive services, and then VAWA, Violence Against Women Act, budget line item. This is the agenda for our session on March 6th. I'm not going to go through it. You can read what's here on this slide and decide whether or not this content is going to be helpful for you. We hope folks will join us again on March 6th. So before we get started, we know that some of you might be new, and some of the things that we're going to talk about may or may not be applicable to you depending upon whether your agency is the recipient of the HUD grants or a subrecipient. It's important for you to understand which of those two things your agency is on each of your grants. And so I'm just going to take a quick minute to go over that. So every grant has a recipient, and that's the agency that executes the grant agreement with HUD and receives the funding directly from HUD by drawing it down in ELOCs. And in Connecticut, many of our grants have either the Department of Housing, DOH, if you're a rapid rehousing grant, and a couple PSH grants, DOH is the recipient. And then for most of our PSH projects and our street outreach projects, the Department of Mental Health and Addiction Services, DMIS, is the recipient. And then the nonprofit serves as the subrecipient. So the nonprofit subrecipient does not have a contract with HUD. Your contract would be usually either with DOH or DMIS, and you don't draw down in locks. Rather, you get paid by DOH or DMIS. We also have projects in CT BOSS where the nonprofit agency is the grant recipient. So if you're not clear on which role your agency plays, you should be sure to get clear on that by either looking at the grant agreement amendment or talking with your partners at DOH or DMIS if you're unsure about that. All right. So the first thing we're going to talk about today is match. And again, for those of you who've been around a long time, this is not new. This has been the requirement in the COC project for as long as I've been working in the COC project. So all projects are required to meet a 25% match requirement. So the only exception to that is that we have a few projects in CT BOSS that have a leasing budget line item, and the leasing budget line item is excluded from that calculation. So on all of your other budget line items, you have to have, for every dollar, you have to be able to show that you have matched that dollar with 25 cents. And you can, we're going to talk about in-kind match in a moment. Cash match is way more common in Connecticut. And some examples of cash match are, it could be money, right, that you raised through an annual event, let's say, or a grant that you get from DMIS that your agency uses to provide services to COC project participants. So those would be examples of cash match. Um, so the total match requirement can be met either all through cash, which is the most common thing in Connecticut, all through in kind, very uncommon in Connecticut, or a combination of the two. So, for example, if you've got a $100,000 grant and it doesn't have a leasing budget line item, you would need $25,000 in match, and you could meet that match commitment entirely with cash, so $25,000 in cash, or you could meet it entirely in kind, or you could combine the two, so $20,000 in cash and $5,000 in kind, for example. So if Demas is the recipient of the HUD grant and you are a subrecipient, you do not have to worry about cash match because Demas provides the match and documents the cash match. So there's nothing that you need to do if Demas is the recipient. So during the grant term, your agency has to demonstrate that you received the money that you're using as cash match and that you expended that money on eligible expenses for the grant within the grant operating period. So for example, your general ledger is going to have to show that you deposited the money that you got from Demas, right? And that you expended that money during your grant operating year, again, on eligible activities. So, and then this changed, I don't know, a long time ago, maybe a decade ago. You used to be able to count benefits income like Social Security or disability or Saga Cash. You used to be able to count that as match, and you can no longer do that, right? So in order to count as match, the money has to come to your agency, and benefits don't come to your agency, right? They come to program participants, so you cannot count that as match. All right. So this is just a quick note for those of you that are a YHDP, that have YHDP projects. I think it's the last two NOFOs maybe, HUD did have this special provision in the NOFO that said you could request to be approved to not have to meet the 25% match requirement. So you've got to have approval from HUD to do that. So you would check your grant agreement to know whether or not your agency has such approval. Going to be pretty uncommon. So, all right. So we'll talk a little bit about in-kind match. So in-kind match, some examples might be you've got a board member, right? And that board member donates their time to provide your agency with free legal services or accounting services. Or you've got a federally qualified health center, an FQHC in your community, and they are providing services to your participants. Or maybe you've got a local restaurant and they donate donate leftover food to your residents, right? Those are all examples of in-kind match. I see Kathy has her hand up. Hi, Kathy. Good morning.
Good morning. This may be too technical, but I've really struggled with how to reflect this in our accounting system because we track all the costs that we charge to our DMIS contract, for example, with a customer job, and we have that all down to the level of detail. But if you have anything that's guidance on how people track the match, I just would love to get direction on where to find that.
Howard, can you take that one?
I could do. Kathy, you're talking about how it is you're going to account for the match in your books. Is that what you're saying?
Right, because I have those costs assigned to whatever they're assigned to. And now I also want to use them as match against my HUD, against the BOSS contracts. But as you know, in accounting, you can only go one place. Or maybe what you do is you do it offline. But I don't, this is probably too technical, so I'm sorry. Maybe I can touch base with you later, Howard, and understand this a little better. So I may be the only one, struggling with that.
I mean, the most important thing that you're going to want to do, though, is to be able to show that you can sum up those cash receipts that you've had either from DMIS or the other source that you're applying to those match, and you really want to be able to show that they are that you have received them and the dollar amounts in which you have received them.
Okay, I think I can do
Yeah.
that. So I'll just do that kind of
Okay.
offline. I
Hmm.
got it.
Hmm.
Thanks, Howard. Thanks, Kathy, for the question. And again, please don't hesitate to ask questions throughout the morning. So what's HUD going to be looking for if you're using in-kind match? So you're going to have to, before they're going to execute your grant agreement, they're going to want to see an MOU between whoever's providing that in-kind match and your agency. Again, that you're going to have to document that you're using that in-kind match for are things that are eligible under the COC program interim rule. And that you actually received those things, the services, the goods, during the grant term, and it has to be valued right at a standard industry rate, right? So you can't say, this book that we got for our GED classes is worth $4,000, right? It has to be valued at a rate that is reasonable and consistent with how similar goods and services are valued in your local area, right? So a little bit more about documenting in-kind match. So when HUD is reviewing the documentation, they're going to be looking for documentation that's on the donor's letterhead. They're going to want that letter to be signed and dated. Again, they're going to want to make sure that the value is consistent with the costs that would ordinarily be paid for similar goods and services in the local market. They're going to be looking specifically for the date on which the in-kind donation will be available, the project operating year for which the match is being contributed, and how the match is going to be used. Those goods and services are going to be used to demonstrate that they're going to be used on allowable activities. And then, just a quick example of that. So if the donation again was a book, right? You're going to want to say that it was a book that you're using for GED classes for your participants, because that's an eligible activity. All right, so these are just a few more requirements for that documentation. You're going to want to say in that letter that the donor is making an unconditional commitment of that donation of either time or services or goods to the project. You're going to want to describe specifically what those goods and services are, and if it's a service, you're going to want to state the profession of the person providing the services, right? So it's a lawyer who's providing legal services, for example. So we always encourage all the grantees to only use in-kind match as absolutely necessary. In Connecticut, we tend to be very lucky that there are other sources of funds besides COC funds that we can tap in order to demonstrate cash match. And it's definitely much easier to document your cash match than it is in-kind match. So please use cash match if you can. So what happens if you said that you were going to, you're going to have to say in your project application that you've got a 25% match commitment, or HUD will not execute the grant. But then what happens if they come out and monitor your project and you can't document that you actually met the match commitment, right? So if that happens, what will happen is HUD will require you to pay back the funds that weren't matched, right? So this is a big recapture risk. So it's an area where you really want to make sure you've got your T's crossed and your I's dotted so that that does not happen. And remember that if HUD monitors you, they're going to monitor you based upon the full amount that you committed in your application. So don't commit more than 25%. It's all risk and no advantage to showing more than 25% match, even on a new project, right? There's no scoring bonus for committing 50% match or 30% match. So only commit 25% match, don't overcommit. Kim? Good morning, Kim.
Hi, Lauren. Yeah, just a quick question. I think so. When you mentioned much earlier that leasing is excluded from
Yeah,
the match, that's not rental assistance,
not
though.
rental assistance.
Okay.
Good clarification, Kim. Thank you. No, rental assistance and leasing, and we'll talk about this a little later. They're two distinct COC budget line items, and in CT Plus, almost all of our grants are using rental assistance, not leasing. So very few of you are going to have that leasing exclusion on match. Kathy?
Yeah, is if we're subgrantee, is some of this match being provided by the state agencies, or are we supposed to document
So
that full amount?
if you're a subrecipient on a DEMIS grant, you don't have to worry about this at all.
Okay.
They are fully documenting. They are both providing the commitment letter up front and then documenting it all on the back end. So there's nothing you need to do if you're a DEMIS subrecipient. If you are a DOH subrecipient, the subrecipient is responsible for the match commitment. So your agency has to be able to demonstrate the match commitment for if you're a DOH subrecipient. All right. Great questions, guys. Keep the questions coming. So we're going to talk a little bit about program income. So program income is basically any income that's generated by your COC project. So the most common example is rent that's paid to your agency by a program participant in a congregate project, right? So your agency owns the building and a recipient is paying you rent. Another example we see sometimes when we go out and monitor, again, in congregate projects, is you've got a building and you've got on-site laundry in the building, and your recipients are paying money to do that laundry, and you are collecting that money out of those laundry machines, right? So that is program income. Scattered site projects, I don't know that I've ever seen a scattered site project with program income. So scattered site projects generally are not going to have program income. So this is only a concern typically in congregate projects. And the rule for program income is that you've got to treat that like it's grant money, right? You've got to expend that money in the program year in which it was earned for your project on eligible expenses for your project. So it works very similar to match, right? You've got to document that you expended that money on eligible activities within the year that you earned that program income. So we have seen sometimes people saving program income for a rainy day fund. And though that would be lovely, particularly in these uncertain financial times, it is not allowable. So you can't hold on to that money. You've got to expend it within the grant operating year. You can, however, use program income to meet your match requirements. But again, very few of you are going to have that option because most of you have scattered site projects and they are not likely to be generating program income. All right, so we are going to do a quick poll to go over some of the concepts that we've talked about already this morning. And Liz, I think, is going to get that launched for us. All right, so here we've got it. I'll read it in case there's anybody that's having trouble seeing the screen. So the questions are, what can't be used as match? And then there are 4 options. So proceeds from the annual gala used to support agency programs, resident income gained by program case managers through SOAR or SSI, for example, substance use treatment services provided to program participants through an MOU with a treatment provider, the cost of rent for the supportive services office that is donated by a member of the organization's board of directors. So which of these things cannot be used as match? I'll give you guys a minute. Looks like people are still working on it, so I'll give you one more minute. All right, looks like we've got about almost 2/3 of folks have answered the question, so I'm going to end the poll and share the results. So, yay, 73% of you guys got this question correct. So, of these examples, the only one that cannot be used as match is income through benefits that is paid to your program participants. Because remember, match has to come onto your agency books, right? And that benefits income is not coming to your agency. So, all of the other things here are allowable sources of match. So, certainly you can use any fundraising that your agency is doing. You can use as in-kind match, right? The substance use treatment, that is an eligible activity. And if you've got an MOU with that provider, that can count as in-kind match. And you, the cost of the space where your supportive services offices are located, that's also an eligible cost on the COC program. And so if you are getting that space donated, that could also be used as in-kind match. All right. So we're going to talk a little bit about how the feds determine whether or not things that you are spending COC money on are eligible or not. And basically, anything you're spending COC funds on, in order for that to be an eligible cost, it has to meet all of the 4 criteria on this slide, right? So it's got to be associated with a COC eligible client. So if you are using your COC funds to do case management in your shelter, right? That's not an eligible cost. If you are, it also has to be in the COC program interim rule, which is linked here on this slide, right? Everything that is green and underlined here in the slides is a hyperlink. In order for a cost to be eligible, it has to specifically say in the COC program interim rule that the cost is eligible. You can't assume things that are not mentioned in the rule are eligible. It's only eligible if it says it's eligible in the rule. And then on top of that, you also have to have the cost approved by HUD in your budget, right? So there may be costs that it says in the rule that those are eligible costs. If you don't have that cost listed on your budget, it's not an eligible cost, right? So for example, if your budget only has rental assistance and admin on it, right? You can't expend COC funds on supportive services unless you get a grant agreement amendment. And then finally, the cost has to be documented, and we'll talk later about what that means to have cost documented.
Lauren, we have a question here. So as you know, the 2024 revisions to the federal uniform guidance to CFR, Howard's answering it. I'll read it so folks get it. Raise the de minimis indirect cost from 10 to 15% as of October 1, 2024. Will this rate be honored by existing COC contracts, or will it apply to new COC contracts signed post October 1st, 2024, when the standards took effect?
And so we don't know for sure yet. And obviously there is sort of a paucity of guidance coming out of HUD these days. And so these days we may get better clarification. Right at the moment, the way it appears is, as you know, in the 2024 competition, HUD very specifically in E-SNAPs indicated that the de minimis rate was going up to 15%. So there is good reason to believe that when those 2024 contracts are executed, you will be able to claim the 15%. It's not certain, since those grants were already executed, you didn't apply for the 15% when you made the applications prior to 2024. So it's not clear that you can claim the 15% on grants prior to the 2024 one. Assuming the HUD goes ahead and executes the 2024 grants, it looks like you will be able to claim that on the FY24 grants.
And we've submitted an AAQ on exactly that question, and we are awaiting HUD response on the AAQ. And as many of you know, sometimes we get responses very quickly on AAQs, and sometimes we never get responses on AAQs. But I promise you, if we get a response, we will put the information out there on the CT Boss email list to our grantees. So, okay. So all costs that you bill to your COC grants have to meet these four federal cost principles. So they have to be reasonable, they have to be allocable, they have to be consistently treated, and they have to be allowable. So basically, to be reasonable, right, and I think I said this earlier, the amount you pay has to be consistent with what a prudent person would pay in similar circumstances. So for example, if you paid an instructor, right, $50,000 to lead one GED class, HUD's likely to say that's not reasonable. So the cost has to be allocable to your COC grant. So for example, if you bought computers for staff in your shelter program using COC funds, that's not going to be an eligible expense, right? You have to expend the money on COC on your COC grant. And costs have to be consistently treated. So we're going to cover the difference between direct and indirect costs in session 2. For now, just know that you have to classify costs either as direct or indirect, and you can't treat the same cost as both direct and indirect, and we'll cover that a lot more in session 2. So, and then finally, the costs have to be allowable. There are certain kinds of costs that are never going to be allowable on a federal award. So for example, entertainment costs. We'll go through all of what those are in session 2. And in addition to avoiding those things that are never allowable on a federal grant, we said this earlier, you've got to be sure that the cost is specifically defined in the program rule as an eligible cost and that is in your project's approved HUD budget. So on that note, so every year, right, usually as part of the COC program competition, you submit an application to HUD with a project budget. Now, we think this year you're not going to have to do that, and HUD's going to process those grants, as I said earlier, without you having to do that. HUD reviews that application and that budget. Sometimes they ask you to make changes during what's known as the technical submission process. They say, oh, that cost is not eligible. You have to go into eSNAPs and make a change. And then once they approve that budget, in your grant agreement is laid out what are the eligible budget line items on your grant. So if you want to spend money on something that's defined in the program rule as eligible, right, but not in your approved COC project budget, you've got to amend your grant in order to be able to do that. So a little bit more on cost allocability. So we covered most of this already. I think we'll talk a little bit about what reasonable means on the next slide. And then I think the only thing we didn't talk about yet is the last bullet, which is the cost has to be documented. So, and we'll talk about this also in session 2 in more detail. But basically for staff expenses, right, if you're charging staff salaries, and benefits, you're going to need to have timesheets to document that cost, and you're going to need, maybe, assuming your timesheets are not capable of doing this in and of themselves, activity logs that demonstrate that the person that you're billing to the HUD grant, in fact, worked on that grant and worked on the eligible activities on that grant during the period that you billed. And again, well, we have an example for how you can do that, and we'll talk more about that in session 2. For other kinds of costs, I think the most common one in Connecticut is going to be rent, right? You're paying rent for your program participants. You're going to want a lease that supports that you're paying the right amount of rent. That lease also documents to whom you should be paying that rent. And you're going to want the documentation of what you actually paid to match what it says on that lease, right? You paid the right amount and you paid the right person. So, and then reasonable costs, basically you can only expend COC funds on a legitimate purpose, right? Either for overall operations of your agency in terms of admin or indirect, or, the operations of your project, right? So it might be super fun to take your staff all to a Beyonce concert, right? But that's not a legitimate cost for your COC project. So that's not going to be an eligible cost. And then again, the standard of reasonable is really what a prudent person would pay in similar circumstances. So the rates that you pay to your staff should be generally aligned with the rates paid to similar staff in your agency. They shouldn't be outrageous. If you're going to buy computers, let's say, you're going to want to show that you followed whatever your agency policies are to make that purchase, to be sure that you paid a reasonable amount for those computers or whatever else you're buying. So I am going to turn it over to Howard, and he is going to talk more about procurement policies.
Hi, everybody. Spoken to you a little this morning, but new voice coming in to speak. Okay, let's talk about purchasing and procurement. First off, and those of you who we've monitored know, we do come around and ask you to show us what your procurement policies are. And we really expect, and HUD expects all recipients and subrecipients of HUD funds to have some written procurement policies. So please have them in effect. You also need to talk about different levels of purchasing. For the federal government, and this the number of changes. OMB revised the so-called uniform guidance little over a year ago, and now a small purchase is, believe it or not, up to $250,000, which for most of us would not be considered a small thing at all. But for the federal government, that is what a small purchase qualifies as. In all instances, I mean, as long as it's not, very simple consumable supplies, pens and paper and stuff like that, just ordinary purchases. Anything larger than that, anytime you're going to go out, even purchasing laptops or anything like that, you just want to show that you just didn't buy the first thing that came up, and you certainly want to show that you didn't go to your brother-in-law's computer store to purchase the equipment. You want to show that you basically took and made some effort to get the lowest reasonable cost for the government. Doesn't mean you need to buy the cheapest computer that's out there on the market. You should be able to buy a laptop computer that is going to be reliable enough to meet your staff's needs. But at the same point in time, you want to show that you've looked at comparable prices of similar items, and the one you chose to buy was the least expensive that accomplishes everything that you needed to do. Again, it's the same thing that Lauren had said before, especially on smaller purchases. It's the prudent principle rule. You act as if these were your own dollars. You're not going to spend your own dollars on the most expensive thing you see. You're going to try and get the best bang for your buck, as it were. So do that. And again, try and keep as much documentation as possible. If your organization uses a purchase order system, use those purchase orders. Again, petty cash should really be used only for de minimis stuff. If it's less than $50 or something like that, anything larger than that, you should not be paying for in cash, but you should be using some kind of a purchase order with a documented check covering that purchase price, or your company issued credit cards. Next slide, please. Okay, we've got yet another poll for you here. So, well, we'll let this poll get established, but here are several different questions. I think we're looking for an answer to each one of these questions. First question is, can projects expend COC funds on expenses that are eligible under the interim rule, but not delineated, not specified in your program and your approved budget? If the COC program interim rule, the regulations do not specify that expense is ineligible, can you therefore assume that it's eligible? And then finally, what risks does a project face if they charge an ineligible expense? Give it another, I think we're close to everybody responding. Couple more coming in. Couple more coming in. I'll give it just another moment and then we'll move along. Okay. For the interest of time, let's keep going here. So first, the question is, can they expend funds on expenses that are eligible? They're listed in the regulations, but not part of the actual project budget. The answer is no. It's really, I mean, there are a couple of factors that have to be. Obviously, a cost has got to be eligible, but in addition to being eligible, it's got to be part of your budget as well. You would need to do a budget, either a minor or a significant budget modification in order to include an expense that is not delineated in your project budget. The way they wrote the rules under the interim rule, it's very explicit. If anything is not specified as being eligible under the interim rule, it is not an eligible use of program funds. So you really, anytime you spend COC program funds, you really want to be able to look into the regulations and find a citation that really refers to that expense that you expend, that item that you expended the funds for, and show that it's listed there. And unless you can see it identified in the regulations, then the chances are good that it's not going to be an eligible expense. And basically, again, if you have the federal government, have HUD pay for something that is not an eligible expense under the regulations. I mean, again, assuming that it was a good faith error made on your part, if that kind of an error is made, what HUD will do is say, unfortunately, you paid government funds on something that's not eligible. You're going to have to refund those funds to the government. If there was a case, which happens so really infrequently, but out and out fraud, where COC program funds were used, taken, and you took an all expense paid vacation to the Bahamas and went visited the casinos there and really had a great old time. HUD will probably do more than just ask for those funds to be returned to the government. That really is, outright fraud, and there could be some more severe sanctions imposed on folks. So again, if you're charging something that's not eligible under the regulations, if it's just an innocent mistake, you'll have to pay it back to the government. If it's deliberate fraud, the sanctions could be even more terrible.
Word, Kathy has her hand up.
Oh,
Yeah, so Howard, checks, credit cards, I understand, we're doing a lot more ACH stuff. So we pay directly through a website and basically the documentation would be in our bank account. Have you encountered that? Or I assume we're going to give a screenshot of our bank account to show that the money went out, or should we not be doing that and only pay by check? A lot of people don't want checks anymore.
no, exactly. So, Kathy, what kind of expenses are we talking about? That we're talking about, you're not talking about payments to
Utilities.
participants. You're
No,
talking
no,
about to third
utilities.
party vendors. Yep.
Yes, yes.
I think it's fine. Obviously, in your ledgers, you're making some sort of a notation. I don't know how you note those ACH payments. Obviously, there's no check number associated with, but there's some sort of transaction identification associated with them.
Yes, but
Yeah.
there's no check copy to present. It's just goes right in on our bank statement.
Yep. Again, I can't see how there's any problem there. Again, as long as you've got the documentation, as long as it's really clear going to a third party vendor. If those kinds of payments were being made to a participant, then you want to be very clear as to what the reason for those payments were. But if it's clearly going to, like, whatever the name of the utility company and stuff like that, it'll be pretty clear, I think, to anyone reviewing it as to what the purpose of that payment was.
Howard, before we move on, somebody PM'd me a question that I think is helpful for the group to hear, in case it wasn't clear earlier when we were talking about match. And the question was, so when you do your application, you have to commit 25% on your entire grant. There are cases, unfortunately, where you may not actually spend your entire grant. So the question was, is the 25% match on the original grant amount or on what you actually spent? And I believe the answer to that question is it's on the full COC amount that you are awarded. Is that correct?
I'm not as certain of that. I mean, basically, you are required to match all the COC dollars by that 25% match. But if you're not actually expending those COC dollars, I don't know that you're required to match funds that you weren't able. I mean, so for example, if it's rental assistance and for some weird reason, on and you were supposed to serve 25 people and your program started, and we see this happen fairly frequently, your program started really late in the year, and instead of serving 25 people, you're only able to serve 10. I don't think they'd hold you to the match for that larger grant. I think they just hold you for the match for the funds that you actually were able to expend, I think.
Okay. And for the person that asked that, if you need us to give you more information about that for your whoever's audited you, let us know. We're happy to verify that through some sort of citation.
Hey, Lauren, this is Lisa.
Okay.
I'm just jumping in. Yeah, I had questioned that. I believe this had come up in a recent audit. So for us, and I believe HUD confirmed that we had to match 100%
Of the
of
award.
what we were funded rather than what we had spent.
Oh, okay. Thank
But I
you.
just wanted to confirm. I didn't know if somebody knew. So maybe I'll dig a bit deeper into that and find out. But thank you.
All right. Thanks, Lisa.
Thank you.
All right.
Okay. Now we're talking about going into your individual budget lines, and we're talking about how you can spend those dollars on those budget lines. As Lauren had indicated, rental assistance is, maybe the most commonly used budget line and maybe the largest budget line in most of our grants, so it pays to pay attention to what you can expend those rental assistance funds for. First off, you can pay up to 100% of the reasonable rent for the unit. So remember, under rental assistance, the amount you can pay is not limited by the fair market rent. The amount you can pay under rental assistance is limited by the reasonable rent. You have to have any unit receiving rental assistance, you've got to have a rent reasonableness determination in that participant's file showing that you've compared at least 3 comparable units, and the rent that you're paying is equal to and not greater than those comparable units rent. In that case, you can pay up to 100% of the reasonable rent. Obviously, you'd be paying 100% of the reasonable rent in those instances where your participant did not have any income, or if it's under a rapid rehousing program and in the initial months you're paying a larger share of the rent than in the later months. In permanent supportive housing, again, if the participants have income, they would be expected to pay a percentage of their income towards that rent. But if there's no income, you can pay all the rent through the program. The COC regulations allow up to 2 months rent for a security deposit. And in a number of instances, that is a useful tool. And it can help you solicit the participation of a landlord by being able to offer a larger security deposit. This parenthetical thing about only 1 month for participants 62 years of age, 62 years or older, that's a Connecticut law limiting security deposits for seniors to 1 month's rent. That's not the COC program rule, but obviously we need to follow both the federal and the state rules. If you're outside of Connecticut, in a lot of other states, you can indeed provide a full 2 months of security deposit. You can also, when signing the lease, provide upfront the first month's rent, and you can also upfront provide the last month's rent to the landlord as well. Again, sometimes these can be incentives to get landlords to participate in the program because you can provide a fair amount of funds to the landlord right up front before the participant even moves in, giving them a little more comfort and security. There is a provision under the rental assistance budget line to pay for damages to the unit that may have been caused by your participant. There is a limit. There are 2 limits on that. First, it cannot exceed a month's rent, number one. And number two, you cannot make that payment until basically that payment is only made if the tenant has left the unit was left in a certain state of disrepair, and you're going to use those program funds to cover some of that disrepair that was left by the participant, but they have to have already exited the unit in order to pay down the damages. And finally, HUD says the costs of implementing the regulation is allowable under that line item. So the various costs of administering rental assistance, which would either be the housing quality inspections that we're now doing, the why did my mind blank out on the new name that we're going to call it? It's changing in the not too distant future. When they have the new requirements, that will be other kind of inspections. The staff time you need to do to both verify people's income and calculate the amount of subsidy they're going to receive. All of that staff time is associated with it. And also, we talked about conducting that rent reasonableness analysis. There is some staff time associated in doing that. So all of that gets charged. Those staff hours get charged to the rental assistance budget line. They don't get charged to case management or admin or any of those other budget lines. The only exception is, and who knows why they did this, but they wrote the regulations so that if you're doing an environmental review, which you need to do for most units receiving assistance, the costs of doing that are billed to the admin line, not to the rental assistance line. And I see that Sonia has raised her hand.
Good morning.
Hi.
I had a question in reference to paying for 1 month of damages to a unit once the tenant leaves. Is that beyond the security deposits? So we have a security deposit on site, and if the damages are the security deposit in addition to some more funds, we could pay up to 1 month. I just want to be clear.
Yep. It's you would have paid the security deposit up front. Sorry, Lauren, you're going to say something?
I was just going to say, I happen to know that Sonia has a leasing budget line item, not a rental assistance budget line item, at least on one of your grants, Sonia. So this is only eligible on the rental assistance budget.
Okay, I understand
It doesn't
that.
apply for leasing. Okay.
No, I understand. So reference to the rental assistance, we put in 1 month security deposit.
Yep.
And say the client damaged the unit and say the security deposit is $1,000. The damages is $2,000.
Yep.
Are we allowed to pay, let them keep the security deposit and pay another $1,000?
If the rent was 1,000, so it's 1 month's rent. So it's not $1,000, but it's 1 month's rent that you could. If the rent was $1,000, yes, you could pay an additional month's rent.
Oh, an additional month's rent and they keep it. Okay.
Yep, for damages. Lee?
Hey, good morning. So
Hey.
we have some contractors that are using the rental assistance to pay for staff who are doing the inspections, rent calcs, etc. And I think it's caused some challenges in terms of having enough available rental assistance to meet the
Dollars.
required number of households to be served. Would the recommendation be to request an amendment from HUD to move those staffing costs to the support services line item? Or because we'd still be obligated, right, to serve the same number of households?
Yeah. What's supposed to happen is, although HUD says you're supposed to pay for those out of the rental assistance budget line, but obviously the rental assistance line has got to be paying for rental assistance. What they're hoping is that you're going to achieve some savings in that line from the participant share of the rent. So when hopefully there are a sufficient number of participants who got income and where they're paying 30% of their income, it means that there are dollars in the rental assistance budget line that you're not able to draw down because of that participant rent, and that's how you pay for it. It sounds like that's not always working out that way, or their cost of administering the rental assistance may be a little costlier here. The challenge is there are two challenges. First, HUD is pretty specific in terms of the number of units that are supposed to be assisted. And so again, if your contract is to assist 20 units, say, HUD is going to have the expectation that they're going to be 20 units assisted. So you really are not allowed to serve fewer people because of that. I think that really, and HUD is pretty clear in the regulations that the cost of administering rental assistance are to be borne on that line. So I wouldn't really try to move those expenses to the supportive services line. I, again, either try to cover it or have them charge lesser amounts of staff time to that budget line.
Got it. Thank you.
Okay, let's move on. I think we're talking about leasing eligible costs next. Oh, and here it is. Thank you. So remember, there is one of the differences between leasing and rental assistance is there is an absolute limit in terms of how the HUD dollars that you can spend on rent. Under leasing assistance, you cannot use HUD dollars to pay more than the fair market rents. That's an absolute limitation. If you're using the leasing budget line, you cannot use HUD funds to pay more than the fair market rent. If you've got a lease and it's got to specifically claim that certain utilities are included within the lease, they could be, the unit's electricity, the for natural gas or the water utilities or sewer. If those expenses are included in the lease, then you can cover those expenses through the leasing budget line. You are unlike rental assistance. One of the prohibitions in the continuum care program is you cannot combine funds on the operating expense budget line with units that are assisted under the rental assistance line. That is not the case for leasing. So under leasing, you could indeed, if you have an operating cost budget line, you could use that operating cost budget line to pay for the utilities in units that are leased with COC program funds. You can use leasing funds to pay those security deposits, excuse me. And again, as with rental assistance, you can indeed provide in advance the first and last month's rent when you sign the lease. I mentioned the operating costs budget line. Strictly speaking, you're probably going to encounter the operating cost budget line if you've got a situation where you've got expenses on the leasing budget line, or if you've got a situation where you're actually the owner, say you're the owner of a building that we're using for permanent supportive housing, and you use the operating cost to cover the costs of operating and maintaining that house, that structure that is providing permanent supportive housing. And therefore, you can pay for things like maintenance and repair. You can pay for building security, but notice this, there is this additional requirement. So if you're going to pay for building security, you're going to use the security line on your operating budget, you want to be certain that at least 50% of the units or 50% of the area in the building being assisted is covered by COC program funds. So you can't use COC funds for security if the COC program is only, say, for example, paying for like 10% of the units in any given building. Utilities, as in electricity, gas, water, and sewer, are eligible costs under operating. Remember, be careful about things like cable TV, cable expenses, and things like that. Those are not considered to be a utility cost. And HUD is still, although they, under the various COVID things, had more flexibility when it came to internet expenses and stuff like that. Thus far, these regulations still do not recognize internet as an essential utility like these other ones. So that's not covered as well. You can use operating costs to pay for furniture, furnishings, beds, dressers, kitchen tables, things like that in the apartments and the units that people are residing, and various bits of equipment small amounts of equipment that you may need for this, as well as if there are staff and related costs related to doing these activities. Sonia.
Yes, good morning again. Just a quick question on operating costs. Utility allowance, is that included here?
No, so the utility allowance would be under the rental is either going to be under the rental assistance or the leasing budget line. In theory, the fair market rents that are presented by HUD are inclusive of utilities. The utilities that they're inclusive of is up to the utility allowance that's been established by the local housing authority. So you can either cover or reimburse folks for utility costs up to the utility allowance. That's under rental assistance. Here, if it's under operating costs, it's not the utility allowance at all. It really is the actual utility costs, and you're allowed to pay the actual utility costs under operating expenses. You're not limited to the utility allowance.
Okay, so under a leasing project, because it was my understanding that the utility allowance could not come out of the leasing line item, it had to come out of like the program income. I just want to be clear that we're giving that utility allowance, because CRT pays 100% of the rent and the client pays program income to CRT. So this is one of the unique situations. And so I just want to make sure when we paying the utility allowance, because we still give that to the client, that I'm taking it out of the correct budget. And in the past, it has been a program income budget, but I'm hearing you say we could take it out of the leasing budget. Is that correct?
Well, so assuming if let me state this correctly. So if your participants they have income, and you're requiring that they are paying 30% of their income for their rent. So one typically first applies the participants' rent towards the utility expenses up to the utility allowance.
Yeah.
To the extent to which their rental obligation exceeds the utility allowance, they're going to pay that balance to the to you in this case, or the property owner, whether when it's not under a leasing arrangement. If they do not have sufficient income to meet their to pay for the full amount of that utility allowance, you can pay for the balance of that utility allowance. Lauren, correct me if I'm wrong, but I believe you can use the leasing budget line to pay for the balance of that allowance.
Sonia, I'll look it up when we're done just to be sure, but so I'll get back to you one-on-one afterwards. I'll look it up just to be sure.
Perfect. Thank you so much.
Thank you. Okay.
Sorry.
Okay. As indicated above, or we've said several times, and we had a little quiz about that, these are the big cost items under which you can expend supportive services funds. Recommend all of you to pay attention to the regulations because they go into a fair amount of additional detail as to what you can pay for under each one of these budget lines. There are certain limitations on it. For example, under the moving cost, that is a one-time reasonable expense for moving. Under expenses like legal services, for example, you are not allowed to use COC program funds on immigration-related matters. You can use legal services on child custody-related matters. You can use legal services on helping people clear out former warrants and things like that, other kind of engagements with the criminal justice system. It's around immigration and citizenship that you are not allowed to use COC program funds to assist participants. When we're talking about things like mental health services, outpatient health, and substance abuse treatment services, the goal is to always use mainstream resources whenever that is possible, and only use COC program resources for expenses like that when there's no way to access mainstream resources for that purpose. On expenses like transportation, remember it's not transportation in general. If you're paying for a client's transportation, it really should be for work, for medical appointments, for things like that. You're not paying for transportation for recreation or entertainment for participants. There is under transportation the possibility that you can actually provide, if there is not adequate public transportation, and in lots of parts of Connecticut there is not adequate public transportation, you can actually use those transportation funds to actually make minor repairs to participants' privately owned vehicles to allow them to be able to access transportation, but there are limitations there. You can't do a repair that is greater than 10% of the blue book value of the vehicle. So you want to pay attention to things like that when you're getting into that. Utility deposits are again those deposits made on behalf of participants for the utility. But remember, it says deposits, so don't by mistake pay for actual utilities on your supportive services budget line. That would not be an eligible expense. I think a question came in on.
Yes. Can you purchase things like scrubs as employment assistance for a new job?
Probably. You can provide certain assistance to equip people to be able to perform a job, and certain of those like certain required things, maybe work shoes as well. If they're doing some kind of a construction work, could be a potentially legitimate thing, especially if folks cannot really perform that employment without those items.
There's another question too, Howard. I'll summarize it. It's basically, can you move money? You know how within the supportive services budget line item, HUD delineates categories, and the question is, can you move money among those categories?
Yeah. The only thing that you need to go to, it's when you move from one budget line to another, that's where you got either If it's a minor, remember moving less than 10%, that is a minor change. You can do that on your own, but you need to inform HUD that you've done it because HUD has got to change the budget line, the amounts in the budget lines in ELOCs. Otherwise, you will not be able to draw down those additional funds. However, within a budget line, within the supportive services budget line, you're not really, you can say that it was going to be for case management, but if there was, an imminent legal need or something like that, you could use those supportive services to pay for those costs. Okay. Oh, okay. Those of you who've got grants under the Youth Homelessness Demonstration Program, there are all kinds of additional activities that you can use that you can pay for under the program. It gets challenging and a little confusing, but remember, this is only for YHDP grants. Generally speaking, these are only YHDP grants where HUD specifically allowed these additional special activities to be performed. If that is the case, you can do all kinds of stuff that we could not otherwise do in the COC program. And again, you can pay for these rental arrears, utility arrears, more payments for utilities. Again, I had indicated that moving expenses were a one-time only expense, but under YHDP special privileges, you can have more than one move. Again, we talked about unit damages are limited to 1 month, but under YHDP, sometimes that can be longer. I talked about the challenges for internet, but under YHDP, it is less of a challenge. And also, again, this could be great. I mean, you could have a youthful participant in YHDP who, really needs that vehicle, really needs to be able to drive in order to be able to either be employed or continue their education, in which case you can help them both with insurance registration and even some past violations and so forth. I think we've got a couple of other YHDP special activities. Again, these are only going to apply to folks who are YHDP grantees who've got permission from HUD. And the other special activities are, here we go. These other expenses are potentially covering housing startup expenses, which is great. Obviously, young people have very few resources with which to make their homes immediately habitable and usable, and also clean and tidy. And also sometimes the only way, again, with youth, the only way you can maintain contact with them in order to do case management, in order to support them, is if you can provide them with a means to be able to communicate with you. And so you can provide cell phone and service to folks if you can demonstrate that it's necessary and essential for you able to support them in maintaining their housing, and as well as legal expenses. But remember, immigration is still going to be completely taboo for the use of COC program funds. Okay, yes. So if you are basically, in order to provide supportive services to your participants, you've got a place, a building, either part of your offices where your case management staff is located. You've got an exterior, a remote location where case manager are working out of. If that is the case, you can, no surprise, pay for the costs of operating and maintaining that place where your case managers or other supportive service workers are working from. So you can pay the utilities and the furniture and related equipment costs of those supportive services offices. Okay, there are some things that you can't do. Again, HUD basically has said pretty clear about this. If you've got a license, if somebody is a licensed social worker, which is a great thing and takes a great deal of time and effort in order to secure, but HUD basically says that's your professional qualification. So HUD does not pay for that. It is the responsibility of the organization or the individual staff member to cover their professional licensure and other requirements. HUD considers gift cards to essentially be the equivalent of cash. You're not allowed to provide cash to program participants because it's impossible to know that that cash was being used for the specified program purpose. It's cash. Cash can be used for anything that accepts cash. That is why we try to avoid using cash, and therefore gift cards as much as possible. It's kind of a drag because, again, if you want to help people get groceries, gift cards had been a great way to do it, but you're really just not allowed to do that. You have to have documentary evidence that the COC program funds would have been spent on food, and a gift card is not going to give you that documentation. Um, as I said, you can do, I mentioned earlier that there are some limitations under which you can actually pay for repairs to participants' privately owned vehicles, but of course there are limitations. There's got to be inadequate public transportation, as we noted before, and there is the ceiling on the amount that you can pay in terms of repairs to vehicles. How do we pay for furniture? Well, and obviously it's a really important thing, because to put people, especially people who experience homelessness, and you put them in a unit and that unit is vacant of everything except for the four walls and a light fixture in the ceiling, that ends up being pretty depressing for folks. So it's really important for us to help people make their homes as useful and welcomingly as possible. So a lot of times that happens through donations, through getting furniture drives, through thrift stores and other things like that. You can pay for furniture only when you've got an operating budget line. And as we've indicated before, you can combine that operating cost budget line with rental assistance. So again, if you're assisting folks with rental assistance, you're really not going to be using your COC funds to pay for the furniture for their units. You can pay for the essential desks or other equipment like that for your supportive services staff to be able to work, but you have to pay for that under the supportive services budget line. There's a thing called operating costs on the supportive services budget line, and that is where you can pay for it. And of course, under the YHTP program, there often are additional allowances made to effectively serve youth. Household supplies. There are limitations on this, but you can often, and none of the specific supportive services budget line really speak to paying for household supplies. However, there is a sort of a wiggle room. There is one of the budget lines under supportive services called life skills training, and often in order to really be able to teach people the life skills, how to maintain their unit, how to make sure your floor is appropriately clean, the refrigerator, thing like that. Sometimes people need some supplies in order to be able to demonstrate to them how you do those things. Under those things, if what you're doing is providing life skills training, you can use that as a way to provide some of those essential cleaning supplies and household management stuff to be sure that folks have got skills. And also, there's also under outreach, there is the opportunity to pay for to address urgent physical needs that was sometimes envisioned for people who are living unsheltered, but you can also use that to provide some essential things like blankets and toiletries if folks have no other way to pay for that. And as always, under YHDP, there are certain other additional exceptions that allow you to pay for even more. But again, you can provide some of those essential stuff, basically either looking under the life skills or under that outreach budget line for those essential physical supplies.
We've got a question in
Go
the
ahead.
chat, Howard. It's what is needed to document to show the connection of the supplies and the teaching of life skills is the question.
Yeah, I think that what you're going to want to do, we ask for this a lot. We expect there to be some case notes. So when your case manager or your support service staff are interacting with their clients, their participants, they should be noting what it is that they are doing. So if you have a case note that is sort of contemporaneous, and basically we showed that we've had an expenditure for some sort of cleaning supplies, mops, things like that on the supportive services budget line. We'd like to see if we see a note in the case files that say that the case manager went to participant X's unit, and I'm not going to use that letter. I'm sorry, participant S's unit, and they and they were in the unit and they were demonstrating something about, how it is that you maintain the unit. As long as you've got some sort of a record that there was some staff time spent on that activity, then we've got some documentation that it really was that life skills training, and that will help justify the expenditure. What is the practice to pay? Okay, from Doris, what is the best practice to pay for vacation, sick time for a case manager, things like that? I think that the best practice there is basically you're going to want to establish basically in your personnel policies what the amount of sick leave that every participant is entitled to. And basically you're going to build that sick leave into your compensation thing. So you'll be able to pay them out of your personnel policies. Again, everybody is entitled to sick leave and paid time off. You just want to have a written personnel policy that specifies what benefits a full-time employee is eligible for. And then as long as you've got those written personnel policies that say that what they're eligible for, you can pay them their full salary and give them those paid time off.
And Howard, you would do that on the support, like assuming it's a supportive services staff, if it's a case manager, you're paying that out of the supportive services.
Yeah, but you're basically paying their salary, and by paying their salary, you're paying them for those sick days and other paid time off.
Howard, we have a question. Can we pay for job training courses for clients?
Yeah, so there is education. Is there as an eligible expense? So as long as it's a reasonable cost, you could use that. You could pay for that. Again, remember the concept of reasonable. So again, you're probably not going to send somebody to get an MBA because the cost of that would be a little excessive for your program. But if there is, some other training course that would allow them to gain earned income, then it could be a reasonable expense. Okay, so again, for office supplies, again, the extent to which those office supplies are directly attributable to support services, then you would bill them to the supported services budget line. If it is, just more in general office supplies and things like that, if it's going both either for your executive, for your fiscal staff and things like that, if you have established if you basically have done a cost allocation that is established indirect costs for your organization, you can then charge those expenses for overall administration to your indirect cost pool. Oh, okay. Starting about 2 years ago, HUD opened up a new budget line for all continuum of care grants, and it is the VAWA budget line. And the VAWA budget line basically allows you to facilitate emergency transfers, which is kind of a great thing. People have always, under the Violence Against Women Act, always had the right to request an emergency transfer when they were not safe in their individual unit. Under the VAWA budget line, it really gives organizations actual funds in which to really make sure that that emergency transfer can happen. For all participants. And as you can see, it's really extensive. You really can cover most of the expenses that folks would incur if they needed an emergency transfer for domestic violence purposes. You can cover the cost of the move. You can actually help them move outside of the continuum of care if that is the way you can achieve safety for that household. You can pay for security deposits in that new unit they're moving to, assuming that they had to leave that other unit. You can pay for the costs of establishing utilities in that new unit that they're moving for. You can pay for any application fees and things like that. Because we're talking about people who are or potential survivors or actual survivors of domestic violence, we want to keep them safe in their new dwellings. You can pay for Ring doorbells, various kinds of internet-related security matters, and the internet to fund that security in order to assure the safety of that household. And of course, additional case management stuff for the move, and also housing navigators to help folks identify and secure that safe unit. Remember that a safe unit is a unit that the participants themselves determine to be safe. Lee.
And just to confirm, my understanding is that someone needs to be enrolled in that particular project already to be able to access the VAWA funds.
Yeah. So they're going to get, I mean, basically they're enrolled in that program, but for whatever reason, their perpetrators are on, they do not feel safe in that individual unit. And we can do this work to make sure they are safe and they feel safe. And it really is, It is that participant who's always making that determination that whether they feel safe or unsafe in their unit. We also, in addition to emergency, the VAWA budget line allows both emergency transfer facilitation and also allows you, as we show on the next slide, to pay for costs for compliance with confidentiality requirements under the Violence Against Women Act, and so monitoring and evaluating compliance, dealing with corrective actions and remedies, training, reporting on compliance, staff time, and maintaining confidentiality. So those are the two eligible expense items. Remember, every project, when you do your renewal application, if it's a renewal application, you can shift to a minor budget change and shift some existing funds into the VAWA budget category. If you're doing a new project application, you can just ask for funds under the VAWA budget lines. And again, first, really most important is that we keep our people safe. So pay attention to this line and these potential resources to ensure that our participants are safe in the units that we provide them with. Okay, I guess we've got a poll. Let's take a look. So what type of expense are these? What is the staff salary for conducting housing quality? Or I finally remembered, Inspire is what the new ones are going to be called. On what budget line do we pay for the benefits for the case management supervisor? And on what budget line do we pay for unit damages? So first one, what budget line do we pay for housing quality or the newly established Inspire standards whenever they get implemented? If you're going to provide, and obviously, you've got a supervisory case manager, how do you provide their benefits? And then finally, if there are expenses for unit damages, under what budget line do you pay? Give you a few more moments. Okay, I think we're getting close to our ending time, so I'll end the poll now. Whoops. Oh, we're sharing the results. Thank you. So under what where are we? Staff salary for conducting the inspections of units. This one you could have more than one answer. Basically, it's going to depend on whether you're funded under the leasing or the rental assistance budget line. But depending on how your project is funded, you're going to pay for the inspections of the units either on the leasing or the rental assistance budget line. You won't be paying for it on the supportive services or the admin budget line. It's just going to be for the under those leasing or rental assistance lines. The benefits for the case management supervisor, that really is a supportive service expense. Basically, the case management supervisor is a supportive services staff member, so they're going to be paid for under supportive services. And then finally, unit damages. Help me on this one, Lauren. We're saying that's rental assistance there?
Yeah, it's not eligible on leasing. It's only
There,
eligible on rental assistance.
there we go. So it's only on the rental assistance budget line that we're going to be paying that expense. Okay. Thank you for that. And here we are. Whoa, 11:29. So sorry, folks. We just brought it in close to on time. But if there are any other questions, Sonia,
Sorry, can we go back to the previous slide, please?
we can.
Can you just give me a little bit more information when you say benefits for case management supervisor? I'm a little bit unsure what that means.
Oh, what they're talking about is again, the various. But benefits is talking about what do we call it? It's I mean basically it's going to be their FICA costs. It's basically their fringe benefits that are part of their salary expense, and they're going to be paid for under the under under supportive services. It's really the payroll benefits that folks get. That's what's referring to.
And this is for the supervisor of the case manager.
Well, that's just an example. It would be the case. I mean, it'd also be the benefits for the case managers as well. Their fringe benefits as well.
I think I'm a little bit unclear when it comes to the supervisor because I thought like the supervisor, if they're doing like admin duty that come out of admin, are we saying that the supervisors paid out of admin, but the benefits come out of support service?
No. So what we're saying is if the supervisor is basically supervising the case manager and basically, having regular meetings with them, assisting them with working with their clients, basically with the assumption is the supervisor's probably got a master's level and has got greater clinical skills. So they're really this case manager supervisor is just somebody who's augmenting the work that the case managers are doing. And that's why we're not saying that they're doing administrative work. We're just saying that they're supporting their case managers and providing high quality professional services.
So we'll stay on if you have more questions about that, Sonia, but I would just wanted to say we are at the end of our time. So thanks everyone for joining us. Liz, I think you can stop the recording, and our